you know, throughout. Like we don't, I mean, and we have Square, but even Square, like, or Venmo, is more like payments focused, but less on kind of content like you would see, say on a WeChat. But yeah, like social commerce and all of the infrastructure that's needed to facilitate that is just nowhere near where it is in Asia right now. Not just in China, but also I don't know how familiar you guys are with C Limited, but kind of what they're doing in Southeast Asia is also, you know, I think in a way arguably more advanced than what's happening here. Although those are all centralized examples, obviously they're not decentralized.
Mm-hmm.
But anyway, you guys have been super generous with your time here, so I guess we can sort of leave it at that. But you know, thanks again for all the insights. This is incredible. I feel like we've covered quite an array of topics, and you know, I'll have to listen to this all over again and parse through it all later. But is there anything you guys would like to end with?
I would say that, no, first of all, thanks, Divya, so much. This has been a ton of fun. I think that I really, you know, I think I think we wrote our thought piece, our Bitcoin thought piece in August. And I think we posted it on SumZero.
Yeah.
Bitcoin was trading around $13,000.
I think it was 11 actually when you posted it.
11,000.
Yeah.
It's for $500,000 Bitcoin over the next decade. And I think we're at 5x about from there. So we're like 1/10 of the way to the completion of the thesis. And I think you invited us to or helped get us an invitation to speak at the Value Investors Congress, I think in 20.
Yeah, it was a while ago.
2013.
2013, yeah.
And Bitcoin was at $112 then. And then you also, I think, through SumZero, introduced us to SALT, the SALT conference. And
right.
I think we spoke there in
2015. Yeah.
Ethereum, I believe, was under $1 billion market cap.
Yeah.
All Ethereum. So 500x from there. Okay. So why am I saying all this? Is that we've been saying the same stuff for a decade. And I think that, you know, we've talked to a lot of value investors. We've talked to people in your community. And I think that these things are just getting started. They've had dramatic increase over the past decade, but literally we're so early here, and I just have to keep updating the price target on SumZero. And I can't wait till it hits, you know, 500 and we say, okay, like check, you know, done with this.
Yeah. You know, the problem is, Cameron, every year that goes by, it feels like we're at the first inning again. Despite the fact that price has gone up, because every year that goes by, like somebody comes up with like a new application of this technology that gives you like just, you know, a preview of what's possible. And then a year goes by and you're like, wait, there's this new application of this tech that we didn't think about. And so there are all these like unknowns that pop up and become known. And it throws you for a loop every time. But I think as time progresses, the sort of the credibility of the space increases, and the bare thesis that, oh, it's just tulips, you know, really just goes away. And the reality is that at least in the money management industry, like people are paid to be skeptical, like that's kind of their job. And so in a way they're the hardest to sell, and maybe that's why they miss it all the time. And they're also loath to purchase things at all-time highs, which we seem to keep resetting
there's also this over sort of indexing on Warren Buffett's thesis on the future and technology, not realizing that Buffett's sort of paid to find things that are undervalued, cheap companies, and he's not paid to see the future or understand networks or money networks. But it's sort of whenever he or Charlie say anything about Bitcoin, it's like plastered all over CNBC, and it's like, I don't know. Are these the guys that we should be taking cues from?
Are they the right oracles for this matrix?
For this, yeah.
Yeah. I think that's on point. Well, listen, we'll have to catch up and do a look back in a year when there's even more to talk about. But guys, this was awesome. Looking forward to seeing more of what you guys do, and obviously following the space. So thanks again for taking the time.
Thanks, Divya.
Appreciate it.
We'll have to come back in a year, and what's certain is
a
lot of new things to talk about.
Awesome.
Thanks for having us on.
Thanks, guys. Cameron, Tyler, great to have you on SumZero. This is a real privilege. Obviously, I've known you guys since I was 18, so it's been over 20 years at this point. Not that you guys need much of an introduction, but you guys have obviously been at the forefront of social media, and also now the crypto revolution, and all of the incredible innovations that have happened over the last 10 years in blockchain technology. I think it's I guess worth mentioning also that not only are you guys investors in SumZero, but you also run the Gemini exchange, which, for full disclosure, I'm also on the board of. So I think we've got hopefully we'll have lots of interesting insights on what's going on in the world today as it relates to blockchain. I want to start off getting your worldview. It's interesting, today they released the CPI print, where inflation grew at a faster rate than it ever has since 2008, when we were coming out of the first financial crisis, or not the first, but the last major financial crisis. Part of the Bitcoin thesis has always been about inflation, and I think that the store of value thesis to Bitcoin is pretty well told at this point. But I wanted to get your thoughts on just the current macro backdrop as just a starting point, and then we can dig in deeper in terms of where you guys see crypto heading, where you see Bitcoin going, and all the other stuff that's happening with respect to DeFi, Ethereum, and some of the decentralized applications that are becoming more and more popular. But just curious, what's your take on inflation as it stands today? It's obviously been talked about a lot ad nauseum, and it's sort of, for a very long time, been in check, at least if you rely on CPI numbers. Maybe that's starting to change. Just where do you guys see this, and how do you kind of contextualize it within the Bitcoin narrative?
Well, first of all, Divya, thanks for having us on your podcast. It's wow. We've known you since you're 18. Time flies, right? And I think SumZero might have been our first angel investment when we set up Winklevoss Capital in 2012. So it's been a fun ride so far. So it's great to participate and share some thoughts on Bitcoin and crypto at large. I think that in terms of the theme of the past year has definitely been this protection against this harbinger of inflation, that a lot of folks are coming around to starting to say, hey, this seems like a very likely result of what's going on with the money printing and the stimulus and the measures that were taken for the pandemic. And we're actually happening, a lot of the QE and stuff like that, and the deficit has been ongoing for the past decade, many years since we've been actually out of the previous crisis in 2008, 2009. And a lot of people are saying, okay, well, what is the trade? How do I protect my value? What is, and if this was the 70s, 80s, 90s, even early 2000s, that trade would likely be gold or some kind of real property that would get priced up with inflation. But now we have this new digital asset, Bitcoin, which is a store of value. And if you look at the properties that make Bitcoin really interesting as a store of value, it equals or betters gold across the board. So if you look at the supply of gold, gold is scarce, and we think of it often as a precious metal. But if you look at gold in the galaxy, there's trillions of dollars floating around on asteroids. It's actually a pretty plentiful metal, and if you were to reduce the mining input of energy, that we would mine a ton more gold out of the Earth's surface. We barely scratched it, and 2/3 of the above ground gold today has been mined since the 50s, and so the supply of gold actually increases with demand. The supply of Bitcoin is truly fixed at 21 million. And even though there's only 21 million, you can actually buy a fraction of a Bitcoin, but no amount of demand will increase that supply. So it is literally the hardest money in the observable universe. And I think a lot of people are looking at it that way. In addition to it's way more portable. Try moving a bar of gold around, especially during a pandemic. It's near impossible, right? And it's more divisible. And so if you go down the line, Bitcoin is sort of, we call it gold 2.0. It's a superior version of gold across the board. And these are sort of talking points we've been saying about Bitcoin for years, really since we've been in it, since 2012. COVID sort of accelerated the narrative in many ways for a lot of industries, but in particular, the narrative around the debasement of the US dollar, and then what is the trade or the investment to protect yourself against that oncoming inflation. And a lot of people, not just in the crypto world or technology world or libertarians or cypherpunks or what have you, but people who are dyed-in-the-wool Wall Street veterans, people like Paul Tudor Jones that have made their career on being right about a lot of macro issues and things, have come around to Bitcoin. And we're now seeing corporations start to buy Bitcoin on their balance sheet. And so it's a much different conversation than even a year ago. And we're seeing people enter this space and understanding the true power of this emergent store of value. And in terms of inflation, I think there's a really open question as to, are we measuring it correctly? Is CPI even relevant? When you see home prices in Manhattan shattering records year over year by like tens and tens of millions. I mean, I think Ken Griffin might have bought a home for $250 million. It begs the question, maybe inflation, it's been there the whole time. It's just in a different part of the market, and we're not seeing it in the traditional goods that you measure because people aren't stockpiling razor blades and those types of goods, but they are buying assets like homes to protect value, and those are trading up dramatically in a lot of markets.
Yeah, I remember watching videos of Michael Saylor talking about Palm Beach and just like trophy assets in general, moving up 20% year over year and more in some cases. So on digital gold, I mean, this is another part of the Bitcoin narrative that's been told a lot. And, it sort of begs the question, because the Bitcoin as a crypto token, it was initially thought of as a currency or maybe marketed as a currency. Do you guys think of it as a currency, or do you fully subscribe to it being just this thing you sit on, like a gold?
Yeah, so we think of it as a store of value, and similar to gold, a store of value can appreciate. So you don't want to spend things that can appreciate, and that's actually one of the difficult barriers to people understanding this. Is they're called cryptocurrencies or digital currency, and people think that it necessarily has to be used like a medium of exchange, like the dollar, to have value. But nobody buys a cup of coffee with gold, yet the market cap of gold has a $10 trillion, it's a $10 trillion value, and no one's complaining that gold isn't shiny enough. So, store of values are sort of one end of the spectrum of the money continuum. And a good store of value should appreciate over time, especially in the backdrop of inflation or hyperinflation. So, and you want to spend things that lose value over time, that if you sit on them, they're bad investments. Like if you put dollars in your mattress and inflation's 10%, you're losing 10% of your value a year, because you're just storing your life force in dollars. So you want to store your life force in things that are scarce, that are fixed like Bitcoin, that are hard and sound money. And you want to spend things like dollars that depreciate over time. So we don't think that, if we're right about Bitcoin being gold 2.0 and Bitcoin disrupts gold, then the market cap of Bitcoin will have to be at least 10 trillion. Today it's around 1 trillion. So it has to go up, or it will go up 10x from here if our thesis is correct, which would put the price of Bitcoin at $500,000 a Bitcoin. And that's just the gold 2.0 story. It could become the global reserve cryptocurrency of the world. It could underpin the security of other blockchains. It could also have other layers, different layers with other currencies where stablecoins can happen. But ultimately, we think the store of value thesis alone for Bitcoin is super compelling. It doesn't have to be used or accepted by merchants or used to pay for things for it to have value, similar to gold. And we actually learned our lesson the hard way. We bought tickets to Richard Branson's Virgin Galactic tickets to space at $250,000 a pop back when Bitcoin was worth $400 a Bitcoin. So we overpaid by, I don't know what, do the
100x, yeah.
100x, right?
Yeah.
And the famous story is the first Bitcoin purchase ever for 2 Papa John pizzas that today would be worth the equivalent of $500 million.
Right,
So,
right. You mentioned something.
You mentioned your Bitcoin pizza moment.
Right. You mentioned, kind of something interesting about the uses of Bitcoin or the potential value catalyst for Bitcoin aside from digital gold. I think for a lot of people, and myself included, I would put myself in this category. Gold as an investment doesn't appeal to a lot of people because it's a non-productive asset. It certainly has some value as as a substrate for jewelry, and I guess there's historical value, and in certain countries like in India, it almost has religious value. But if you look at the price of gold on a per ounce basis and think about, well, how much of that is actual like jewelry value or industrial value, it's nowhere near the actual price that gold trades at. What do you say to people where like the digital gold narrative doesn't really resonate because they're not necessarily, that's not in their lane? Like I get a guy like like macro investors like Paul Tudor Jones that are used to looking at gold. It's in their lane. Like they're kind of, they do value gold as a store of value. But what do you tell folks who don't think of gold as being worth the $10 trillion that it trades for, or having a direct appeal to them? Why should they own Bitcoin?
Yeah, so my appeal would be, you use the word, gold is not a productive asset. And ultimately, gold is a network. Money is a network. It's ultimately the greatest social network of all time. And Bitcoin is, the digital gold social network. So you're not going to understand it if you try and value it the way you would value a company or an equity with cash flow. Discount cash flow models and how you value companies won't do you any good when you think about Bitcoin, because Bitcoin's a network, And the way you value a network is is using Metcalfe's law, and it's pretty simple. N squared, N being the number of nodes or users on the network. And that's ultimately how you value something like the network effects of a Facebook or a Twitter or any network, including a network of money like Bitcoin. And so when N is 1, it's just 1 squared. But when 2 people join a network, all of a sudden it's a lot more valuable exponentially. And so if I am the only person in the world who owns a phone, there's no one for me to call. If you buy a phone without even knowing it, you've increased the utility or value of my phone because now I have someone to call. So the more that people buy into gold, which they have for multi-millennial, or Bitcoin, the more valuable they get on an exponential logarithmic level. Bitcoin is more exciting than gold, though, because it's open source software. It's a living, breathing organism. It continually evolves and grows and develops. What it is today is not necessarily what it will be tomorrow. The pseudonymous founder, Satoshi Nakamoto, what the fingerprints, Satoshi's fingerprints, at one point was represented 100% of the code. Today, I think it would be difficult to find, his or her or their fingerprints in a very 1% of the code. So this is something that it's an experiment. It's a social network that keeps evolving and growing. And if you think about the internet as one big network of computers, the one thing the original internet didn't have or didn't solve for was money.
Right. Or at least the trend.
Yeah, a protocol, like a value protocol on the internet. And guess what? PayPal and credit cards doesn't count. That's just sort of like square peg round holing existing money, like the banking system, credit cards, ACH, that were invented before the internet. That's shoehorning it onto the internet. But they were created by bankers, not engineers. They're not protocols, and they're not internet native. And ultimately, Bitcoin comes along, it's money over IP, a money protocol. And it is the internet of money. And so you have to think of this technology, this paradigm shift, this movement as significant as the internet itself, but it's supercharged because now you can trade money. So that to me is really compelling. If you want to just get off the gold framework, it's like, wait, this is money that now works like your email, 24/7, 365. And if the best sort of analogy of why this might be interesting is, or anecdote or thought exercise rather, is try and move money from New York at 6 p.m. on a Friday night to London.
Yeah.
When's it getting there? Well, not until Monday. And if there's a bank holiday on Monday in New York or London, which there often are, it's not getting there till Tuesday. And that's insane because we know that money is just information, and we know we can send emails instantly anywhere around the world, 365 or 24/7, 365. Yet our money doesn't move that way in the internet age. And in fact, if you are stuck in New York on a Friday night at 6 p.m. and you want to get money to London, your fastest way is to put it in a bag of cash and go to JFK and hop the red-eye plane to Heathrow. That's pretty pathetic that's how money moves in today's day and age. And so Bitcoin changes all of that. Or as the meme goes, Bitcoin fixes this, or crypto fixes this. And that's just the beginning, the tip of the iceberg of what this technology now makes possible.
The tech is incredible, and the more into the weeds I get on it, the more it's, it's almost like eye opening to see what is happening in the ecosystem. The 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 I think philosophically, for especially for longer term investors who are not trying to day trade this stuff, and they want to own it because they buy into the thesis. How do you think about competitive threats to the Bitcoin blockchain? Now, there are now thousands of blockchains, and you mentioned Metcalfe's law. Like, I mean, by that logic, would you say all of the other pure store of value tokens are just kind of a waste of time? Like, is there any reason to own something like Litecoin, or now we have Dogecoin, which is a fork of Litecoin, or some of the other blockchains that don't serve as foundations for decentralized applications, but are purely store of value blockchains? Or do you own Bitcoin because it has first mover advantage? It has, probably the most users in terms of wallets, and leave it at that. Like, where is the threat to Bitcoin's store of value narrative right now, from a networking effect standpoint, or from a function standpoint?
So Bitcoin is very much, it's the first mover. It's the first, I call it the OG crypto. It sort of set this whole movement in motion. It's got the most vibrant development community and uptake among exchanges and different businesses in the space who are supporting store of value assets. So it's really Bitcoin's to lose. And I think with store of value, it's winner take most. Silver is sort of a second to gold. And there might be a strong argument that Litecoin could be sort of silver if Bitcoin is gold. And maybe there's value in owning sort of the first and second place. But the power of the network and the power of the development community is so strong. And that's a very hard thing to unseat. There's nothing preventing the three of us from forking Bitcoin right now and creating our own chain, but good luck finding developers to build on it and miners to mine it and exchanges to support it. It's just a very, very tough prospect. But I think, like, just building on some of Tyler's comments before around like Bitcoin being a productive asset, I think that you can keep your value in dollars, and that's depreciating. It's incredibly, the supply is expanding. It's not transparent, not predictable. A lot of decisions made by 12 board of governors in a closed room. The Bitcoin is open source. It's transparent. The supply is predictable, deterministic. There's huge value in that. And as a defensive asset, to protect wealth, it's got incredible properties. Now, the other trade you could do is you could pile into Apple or the FANG companies, but those businesses, in terms of like the actual output of the businesses and the share price of the business, totally outstripped. It's not fundamentally much different business, Apple, than it was a year ago, and yet the price has sort of gone up dramatically. And I think that you could crowd into companies like that, but I think that when more people crowd into Bitcoin, it increases the value of the network based on Metcalfe's law, which Tyler was discussing. And so it seems like, how do you value a store of value that you can move around the world through the internet? And it actually, Bitcoin goes back to sort of the first forms of money in gold. Fiat is sort of this more modern experiment. Of course, we don't remember pre-fiat, and nobody really does, because it's been 100, 200 years. Or right, there's fiat that was backed, and then prior to the sort of the removal of the gold standard. But all that to say is Bitcoin, money in the form of like at least gold as a metal, and not sort of by fiat decree and determined by a government, and or printed or manipulated by a central party, that has a much longer history than the current experiment we're looking at. And I think that is often lost because we obviously can't think back the last 10,000 years. But for most of money's existence, it's been this emergent form of money that's chosen by people and adopted organically and grown virally. And fiat is this much more modern experiment.
The point you make about the evolution of Bitcoin is interesting. Are you guys of the camp that Bitcoin as a piece of technology has effectively that it's petrified in the sense that it's not going to change, and that's why people who own it, like, meaning like the both